The shot right here is exactly why the rich keep getting richer while regular folks struggle, and they will continue to struggle. Since the 1913, the US dollar has lost 97% of its buying power. How is that relevant? Hear me out. The government has mastered one thing, and that is printing more dollars whenever there's a shortfall. A perfect recent example is the COVID-19 stimulus. Around $5 trillion was pumped into the economy, going to households, small businesses, airlines, hospitals, schools, you name it. And what happened next? Inflation soared. Now, you might assume that inflation hurts everyone, but that's not entirely true. Some people actually get wealthier during times of high inflation. Just look around. The stock market is at record highs. Real estate prices have surged, and rents are still climbing. If you own rental property, you are actually benefiting. You're collecting more in rent and watching your property value rise. Meanwhile, others are struggling to keep up. The wealthy, especially those who own income-generating assets, are pulling further and further ahead. The bottom 50% of households in the US just own 1% of corporate equity in mutual fund shares. That means when the government prints more money and devalues the dollar, the people without assets suffer the most. They don't have stocks, they don't have real estate or equity in businesses. They just have cash that loses value every single year. Inflation acts like a regressive tax on those who hold most of their wealth in cash or bank accounts, which is normal for low-income households. This differential effect means that inflation widens the gap unless counteracted. Those without assets fall further and further behind, while those with assets continue to grow their wealth. And this is how the rich keep getting richer. Now, inflation is not some unfortunate side effect. It is built into the design. This is exactly how the government wants the economy to function. The US economy is fundamentally debt-based, which means that it needs inflation to keep moving forward. Both the government and the private sector rely heavily on borrowed money, and that borrowed money only works well when the value of the dollar keeps falling slowly over time. Think about it. If we borrow $1 million today and pay it back over 30 years, inflation makes those future dollars worth less. That means your debt is getting cheaper in real terms as time passes. Now scale that up. The US government has over $37 trillion in national debt. That means it has every incentive to keep the inflation going. Why? Because if the government can pay back the debt with cheaper dollars in the future, it reduces the real burden of the debt. The same logic applies to corporations and wealthy individuals. Imagine a real estate portfolio that is built on borrowed money. The value of that debt is fixed, while the value of the asset, like a home or an apartment building, keeps going up, and the rents that you charge also rise with inflation. This is why real estate, personally, is the only debt that I think is acceptable if you don't go too crazy with all the borrowing. Now, we cannot talk about the rich getting richer without talking about taxes. There's a reason the wealthy play by a different set of rules when it comes to taxes. It's not just because they earn more money, it's also because how they earn it. They earn it differently. And that one distinction changes everything. Let's start with the average American. According to the US Census Bureau, the median household income in 2023 was around $75,000. Most of that income comes from wages or salaries, what's called earned income. That type of income is taxed at ordinary income tax rates, which can range from 10% to 37% depending on how much you make. There's also the payroll tax, which is 6.2% for Social Security and 1.45% for Medicare, which totals 7.65%. And your employer pays the other half. If you're self-employed, you pay the full 15.3%. Now compare that to how the wealthy earn their income. Most of their income comes from capital gains, dividends, rental income, and business income, all of which are treated more favorably by the tax code. For example, long-term capital gains or profits from selling assets held over a year are taxed at 0%, 15%, or 20% depending on your income. That's far lower than the ordinary income tax rate of 37%. Also, if you notice here that a married couple filing jointly can earn $96,700 from long-term capital gains and pay $0 in federal income taxes, and I haven't even considered the standard deduction in this. It gets even more favorable with real estate. Investors can use depreciation to lower their taxable income on rental properties, even if the property is rising in value. So for residential real estate, the IRS lets you depreciate the structure over 27 and a half years. So if you buy a $500,000 rental property and allocate $400,000 to the building, that's $14,500 in annual depreciation that you can deduct on paper. So even if your property is producing cash flow, your taxable income might show a loss. Then you also have 1031 exchange, step up in basis, and so on. Business income is another advantage. The wealthy often structure their income through LLCs as corporations or partnerships, allowing them to deduct business expenses from travel and meals to vehicles and home offices before the taxes are even calculated. This is very important because this is very different from employees who are taxed first and then they pay for everything from what's left over. So this isn't just about how much someone earns, it's also about how they earn it. The tax code favors those who own appreciating assets. That's how the rich keep more of what they make and scale their wealth faster. It's not illegal, it's not even a secret, it's just how the system was designed to reward asset ownership. And if you understand that one distinction, you stop asking how the rich keep getting richer and start asking how you can play the same game. If you're wondering how the Fed can just keep printing more dollars again and again, it's not an accident. It's by design. And to understand it, we need to go back to 1971. That's when the US officially left the gold standard when President Nixon announced the dollar would no longer be backed by gold. Up until then, the foreign governments could exchange their US dollars for gold at a fixed rate. But after years of printing money and funding wars and domestic programs, the US did not have enough gold to back the dollars in circulation. So Nixon cut that link. And since then, we have been on a fiat currency system where the dollar is backed by nothing but the trust in the US government. And under the fiat system, inflation is not a bug, it's a feature. That's why the Federal Reserve targets a 2% annual inflation as a goal. It's not trying to preserve the dollar's value, it's just trying to manage its decline in a controlled way. So when you hear about rising prices, don't assume that it's temporary. The dollar is meant to lose its value over time. It's how the system functions. And to survive the system, you have to invest. You have to own assets that go up with inflation. Better yet, own assets that go up because of inflation. And this is why so many people feel like there's something that's wrong, something is off, but they can't quite explain why. If you're earning more than ever, but somehow it feels harder than ever to get by, it may be time to stop relying on effort alone and start relying on ownership. Inflation punishes savers. Taxes hit workers harder than investors. You don't need to be rich to start, you just need to stop playing defense and start thinking like an owner. Because a dollar today won't buy a dollar's worth of goods tomorrow. That's not a prediction, that's a fact. And there's no sign that this trend is reversing. President Trump ran on the promise of reducing the national debt, but that big beautiful bill broke that promise. And this is not even about party lines anymore. Democrats or Republicans, we've seen the same pattern over and over. They will not stop printing money, and they will not stop devaluing the dollar. At the end of the day, you can't control inflation. What you can control is whether you're being crushed by it or you're being carried by it. And this is why the rich keep getting richer.